Good morning, everyone. Today is the 13th of March, and going to do another weekly market analysis. And what a week, or what a weekend we had. It all started again. Apparently, what we were expecting in terms of the main focus of the Fed being fighting inflation. Apparently, there is the first crisis in one of the sectors, and the one that we are talking about is the banking crisis at this point in the US, where we had CVB, Silicon Valley Bank, going under over the weekend, with the Fed having to interview, creating a bank term funding program, which is going to allow for 1 year, providing loans to bankers at the easier terms so they can be financing themselves. And the reason for that is because they got scared, right? They got scared that this could contagious towards our or many more banks. At this point, we have CVB and we had Signature Bank, Silvergate as well. It was even before that. Many already forgot about it regarding crypto, and many others are in big trouble. So there you go. We had the Fed interviewing. They had a meeting over the weekend, and that's how we see, and that's the main reason that we managed, or we could see the opening this week full of gaps all over the place, right? Because there was a lot going on during the weekend. So here we are, right? So it's basically, it's a mess, let's just call it, right? Is the Fed basically last week, the main focus was the commentary during the appearance of the Fed Chair Powell in front of the committee, announcing or testifying for 2 days, last Tuesday and last Wednesday, saying that inflation is not at the rate that he wants, is not going down at the rate that he's expecting either, and he sees a lot of strength still in the job market. And basically, last week, if you checked the interest rate decision that was being priced in by the market, it was expecting, initially it was 25 basis points, and then jumped through to 50 basis points for the next meeting on the 22nd of March. All of a sudden, that's where the market was last week after that commentary. Interest rates to continue. Maybe some of them are almost pressing in, or being able to see almost a 6% as the peak, or 5.75 at least as the peak in the interest rate, and to keep going for longer. That's what we looked at, and that's why we saw a big sell-off in the equities, in the indices last Tuesday, and the strong move to the upside on the dollar, and then continuing as well with NFP. However, everything changes after this situation with the US banks. All right, so at this point, the rates, they all changed. As you can see here, this is the prediction for last week. And at this point, the chance of being 50 basis points hike, it's basically zero, as you can see in here. And now the question is it going to be 25 basis points, or there's not going to be any change at all? This morning, this was basically almost 100% guaranteed of just 25 basis points. As we are updating or kind of refreshing this page, kind of the odds keep changing. So let's see actually where we are at now. Okay, 71% versus 30%. Regarding this situation, of course, everything that we are looking at, how the market as well is going to open today, is going to be interesting. We are seeing the full sell-off in the European indices. It's going to be interesting to see how the market is going to open for in the America later on. One last data that is coming out this week that you need to pay attention to is the CPI tomorrow, right? So at this point, if you take a look at what we should expect for tomorrow's CPI, is 0.4% for the week, which would lead the CPI to be at 6%. The last thing we would like to see, or the Fed would like to see, it will be a higher number than this to come out tomorrow. Because the Fed is literally now into spectrums, right? So last week it was super hawkish in the commentary, but the behavior that it took regarding how the situation with US banks, it was a dovish approach. It was actually to kind of start easing, providing even better conditions now for the US banks to own themselves. So here we are. Unemployment is still strong. It was something that also came out last Friday, so it was higher than expected. It was came out at 311k new jobs. It was expected 224,000 new jobs. Of course, it was lower, and it was for sure expecting to be lower than the previous month. It was 500,000. It was revised slightly to downside, nothing much, from 517 to 504. But something that we mentioned as well last time that we spoke, it was that since April that the expectation has always beaten, and now the real data has actually beaten the expectation every single time since April 2022. So starting in May 2022, as you can see, the expectation has been always higher. No, the real result has been always higher than the expectation. So it was expected again to be higher than the real data to be higher than expected. The question mark it will be for how much, right? And it was still quite high. We're expecting 224 is almost 90k new jobs being created than the market was expecting. Nevertheless, the unemployment rate actually rose 0.2%. Something also to pay attention to is the average ROE earnings, which was just 0.2 when the market was expecting to be at 0.3%. So it shows a little bit more of a projection of the increase in the earnings, which can eventually help maybe the inflation to go down. But yes, so basically everything that we're talking about in here, it will be the main data to look at in terms of the decision to look for that the Fed will be paying attention to in order to make the decision for the next interest rate or for a long and so on. However, all this crisis in the US bank system, it's now the biggest elephant in the room, right? So the market is, or the Fed is scared. The market is volatile, and you should expect or continue to see high volatility in the next few days. So be careful with your approach towards market for this week. Remember that the number one rule for trading for us traders is always to preserve your capital and to stay in the game for the next day. So don't go crazy with all this volatility. Because we should expect a high volatility as we are seeing right now, and it must continue for the days ahead. So we covered a little bit already what happened last week. Basically, we saw the indices dropping. We saw the dollar going up. We saw the dollar going. We saw the dollar going to the downside last week. Yes, we saw gold going up. Gold is behaving in a way that is finally, it's looking like it's proper edge for all this risk-averse situation, risk-off situation that you are seeing with indices going down, which is quite interesting. Last year, for example, while the indices were going down, gold was also going down. It wasn't really making much sense. But yes, so looking at the Fed. At this point, 71% basis odds of being a 25 hike next meeting in May, expecting basically to stay at where it's going to be. Right? No more. Maybe the peak's going to be maybe based on this week. However, until what point can we rely on this data? We don't really know, because as you can see, it's changing every single time. 1 week ago when we saw it, it was basically all the way through 2023 without any reduction. But now if we start looking at the far end of the year, we're starting to see there is a high probability that eventually Fed is going to even start cutting rates as the year progresses, right? Especially by the last quarter of the year. and maybe by the end of the year at this point, the highest probability is that you're going to be in between 4.5 to 4.75 at this point. So here we are. Here is where we are with the Fed. What else are you going to have this week? In the Europe, we are going to have another ECB interest rate decision next Thursday, right? And looking at the ECB, we are expecting another 50 basis point hike, right? From 3% to 3.5%. And the question at this point for the ECB is what next? Is it going to continue at this rate? Some may say, some may predict that at least another 50 basis points going to be applied as well in May, and then maybe just 25 year after. So question mark is going to be maybe an extra 1.5% hikes during this year until the summer, or how much more is the ECB going to hike? And by any chance, are you going to have any follow-up with of the crisis that you're having now in the US bank system? Is going to kind of contagious as well in the Eurozone. So let's see, this is early days. So let's see what's going to happen. In that regard, everything can change quite fast in here. In the UK, we have unemployment data coming out tomorrow, and then we have the spring budget being announced next Wednesday on the 15th of March. So let's see what kind of measures as well that are going to be announced in the UK as well for the year end, right? Yes. What else? You have consumer confidence later on by the end of the week in the US. Again, this was one of the big concerns, right? Everyone was expecting that everything was fine, or most people were still optimistic that everything was fine. It was just like there was not exactly any problems going on within any sectors in the US. On the other hand, at Alphachain, we already have those conversations that eventually some things could change and quite fast, right? Which is the case that we are looking at right now at this point. And maybe more things are going to be exposed in the near future, maybe more companies, or even maybe different sectors like David, and show some trouble, some problems, which can kind of, let's see what kind of domino effect this may have. And is the Fed going to be able to save everything? That's kind of the question. That's kind of the question that we are going to have. What does this approach from the Fed does in terms of the inflation? Are we going to all of a sudden start seeing in the next few months if the Fed now starts saving every single company, bank, are you going to start seeing inflation going higher again? That's a big question mark where we are right now. That's a big question mark. Looking at the market and what the market has been doing since last week, and maybe what you can look for this week. As you could see, the dollar basically moved to the downside. Initially, there was a strong move up on the dollar on the 7th. It was the first day of the Fed Powell testifying in front of Congress. But after that, we had the sell-off on the dollar and also on the indices, and gold going higher. Looking at what we have been paying attention to regarding to the charts, the dollar, right? It broke the highs from January, right? It created a new high for the year. It was a zone that we were looking at in particular, which was around this level. So we did manage to break those highs. Is this going to mean that the dollar most likely can go higher a little bit? Yep, it could do it to that. Nevertheless, we could maybe see first maybe the dollar going a little bit lower. At this point, it reacted around around here. So it basically took all these highs from there, and now it's reversing. It was something that we were looking for, especially after we kind of broke these lows and we enter into this compression zone. We were looking for to see if the move to downside to fill this compression would be still by while still respecting this level, or it would be by breaking these highs and then making that move. So overall, I think eventually dollar can go higher. Nevertheless, it can go all the way back down first before maybe making the move to the upside. Or maybe if you do respect this level again, if you come here but you respect this level, maybe actually I can have a bigger sell off in here on the dollar. So let's see. There are a few levels to pay attention to in terms of and to see how price is going to react around those particular zones. So this is what we had on the dollar. Looking at the indices, here we are, right? So we're having this sell-off in the indices since the middle of last week, and it just continues. At this point, all this volatility occurred basically since Friday and over the weekend. We already gapped a lot, and then fast moves today. So it's going to be interesting to see what's going to happen in the S&P. Are we going to continue to fall to move to the downside? It reacted from that zone. We have this strong trend line that we broke, that we're paying attention to, and our price most likely is going to react from here. And there is even a chance that can just continue to move down. So again, pay attention to how market's going to happen. Don't forget that this week the hour has changed already. The daylight saving time has shifted in the Canada and the US. So the market's going to open 1 hour early if you are in the UK, if you are in the Eurozone. Usually the market opens at 2:30 UK time this week, and maybe for the next 2-3 weeks until the time changes as well in the Eurozone and in the UK. The US Open is going to be at 1:30 p.m. and the news that usually are at 1:30 p.m. they're going to be at 12:30 p.m. right? So be aware of that. Don't be caught by surprise when you have this news coming out 1 hour early, or when US Open actually opens 1 hour early as well. Yeah, this is a situation that always happens on in March, so be aware of that. So here we are. So S&P most likely is going to continue to move down. Nasdaq as well. So that we noticed that it broke that low. It did indeed broke that high a little bit, but price can easily maybe continue to navigate to the downside. And let's see if by any chance it's going to move up again, or it's just going to continue to move down. It created enough structure in there. Let's see. Most likely are going to continue to move down in here. In Eurozone, we are start having this big sell-off. DAX, something that we have been looking for a few weeks now. We talked about this level of structure, and we talked about price kind of faking out, taking the highs from this level of structure. We mentioned also that we had already broken a few lows, showing indication of where price wanted to go next. The only thing that it was a little bit different is that initially I was looking for price to maybe take these highs, but in reality it respected, because there was still a really good zone at above those highs. Nevertheless, after price created this high, we also talked about the potential look for an opportunity to sell after breaking this level, right? As I mentioned so many times, when you do have important level of structure or something like that, price is going to create a key level in here, kind of demand zone or something like that. It's going to be this really important decision point in terms of, are we going to be looking for price to continue, or by any chance, if price gets a little bit respected here, but when it breaks, that can be literally opening the door for price to drop, and it's exactly what happened. After that, we had these two retests in here, and this could have been great opportunities to try to sell the DAX in this case. So let's go. We already took these lows in here, so let's see what's next and until where DAX can go through. Maybe retesting this level in here, or are we going to have an even bigger sell-off happening in here? Now, of course, this previous level of support, they may work as resistance. If price by any chance kind of retraces a little bit, we may have that move down. Next key level is going to be around this level, and we still have actually this demand zone. And let's see, by any chance, we're not going to go back now to 14k, 14k mark on the DAX. But this one, again, it was a really good prediction that we made for the last few weeks. When you have all this level of structure, eventually, kind of this range, this looks like a really nice kind of distribution phase or accumulation phase, it depends on how you want to call it. That price eventually could start selling off. In this case, it will be distribution. Usually, that's the name when it's moving to the downside. Yes, the Dow. There you go. Right, I've been repeating myself for the last 3 months since December that I was looking for price to get to this level, and it finally reached there. Right, I was looking for price to. I was bearish on the Dow since December, while even DAX, while even Nasdaq and S&P were going higher. I was still kind of what I could see in here. It was more bearish price action in here, expecting price to go down. What I wanted to mean is that there was a high probability that price would first retest these lows before even trying to break these highs, and everything in here, it was quite beautiful. We also talked about the fake out that occurred in here and the scenario of starting to look for those sales. Again, with price breaking lows even before making that final high, showing indication where it wanted to go. We could just wait and see while price keep respecting or breaking these levels until eventually price navigated towards in here. And even after the break of these zones, right? We have the break, we test, and now a continuation as well to the downside. And if we are finally here now that you are finally here, what next, right? Again, I'm not even looking at these lows. I'm looking for these lows even to be taken. So at least I'm expecting price to go at least till here. However, there is literally the scenario where you could see Dow maybe even going a little bit lower, maybe towards this next level, somewhere in there. So we may have a little bit of a move in here, but maybe eventually we can even continue to navigate even farther down. But yeah, so after 3 months, basically, finally, the target that I was looking for the move to downside, kind of one of them has been reached in there. The euro index, this is another one. It's in a big range. Again, this was the last ECB press conference back in February, in the 2nd of February, if not mistaken. And this week we are going to have another one, right? Usually, from what we have seen recently during ECBs, the euro tends to drop. It's going to be interesting. So we are basically it's still at the same stage where we are in here. Comparing with the previous one, are still reacting from that good level on the left side. Price is respected quite nicely this level. We may create a new high before moving down, or maybe we can just move down from here. We'll see. I do like a little bit of the compression. Maybe there's still a few zones in here that can hold euro at the upside. Let's see now price reacts from this level. We start to create way too much structure in here. So if you do have an extra move higher before maybe the move down, that can occur, and I wouldn't be surprised if that eventually can happen as well. A little bit more into that level. There's maybe some kind of trend line that you can draw to see eventually if that zone is broken. Maybe you can help you to guide you towards the direction of that sell opportunity. And the end pairs are just on the rise, right? This is something that we have been looking at last Friday as well. We had the last monetary policy with the last governor, Kurodes. So it was the last meeting with him. Everything stayed the same. The Bank of Japan decided to keep everything the same interest rate at minus 0.10%. The 10-year government yield as well between 0 with a cap to the upside at 0.5%. So everything stayed the same. There was no change whatsoever. And it now is reaching is the end of his tenure. It has been the last 10 years as governor of the Bank of Japan, and now it's going to be a new one starting in April. So it's going to be interesting to see if there's going to be any change in the interest rate and the monetary policy in Japan in the near future, which can lead to some volatility as well in there. And what you have seen in here, the way the yen has been behaving, is a strong move to the upside. Again, it was another zone that we talked about. Paying attention to this demand zone, we're looking exactly for this rally to the upside for the last couple of weeks or so, since the beginning of March. And we are basically reaching now this next level of previous support that can work as resistance. And price is reacting from there. So let's see what's going to occur now. Is price by any chance, is the end by any chance continue to go higher from here, or going to have a little bit of retracement from that level? So there's maybe a little bit more move to the upside on the yen pairs, which is the opposite move from what you're seeing in here. Like it's kind of dollar yen moving down, euro yen moving down, pound yen moving down, and so on and so forth. But this is a good level in here, the retesting of this previous level of support, and this demand zone in here that also can become supply. So let's see what's going to happen. But this was a nice move, or a nice potential zone to look for some reaction or to close some parts of your profit, but if by any chance you are long from there. Yeah, so this is what you are looking for. Looking now at individual currency pairs in here. Even before that, we can jump into oil. So oil again is within all this ranging market, right? So we are still within this this zone between 82 and 70 something, $70 mark. So this is where we are. Let me just change the time frame a little bit. Yeah, so we have been here since basically created this high back in the beginning of December. So for the last almost 3 years, 3 months and a half, we have been within this range. As price was going higher, kind of starts moving down. As price is moving down, price is going higher. So we'll see. Eventually, we are going to break away from this level. Again, there are fears of recession here, but there are the situation in the Ukraine, Russia and Ukraine. There is China reopening, which can help a little bit in terms of the demand side. We'll see. We'll see which direction eventually oil is going to break through, is going to break above this level, is going to kind of break below that level. Even if price drops a little bit more, maybe even within this low, there's maybe still opportunities to look maybe for longs. And even if price rises a little bit more, there's maybe even more opportunities in there to look for sales. Even if you break above these mid-range highs in here, these are not the extremes. The extremes are basically maybe these ones in here, or considering that one in there. So price can easily maybe take these lows and then continue to go higher, and then take these highs and maybe drop again in here. One last point to look at and to see how volatile the market has created or is been moving, of course, paying attention to the VIX, right? The VIX that has been in the beginning of February and even January, it was all the way down to the 17, which is a measure. VIX is a measure of scarcity as well in the market, and what kind of behavior should I expect, right? VIX higher in theory means indices to go down because the market is scared and most likely is in a bearish momentum. And when the VIX is maybe below 20 or something like that, you should expect some expansion, some bullishness in the indices. Above 40, that means really scary. That could mean a big really sell-off. As you can see, even last year, we never really managed to go above 40. Even during all this bearish year that we had last year, there was never the moment where we managed to break above 40. As you can compare with the previous momentums that we went above 40. It was, for example, in here, COVID. Then, of course, during the last previous crisis back in 08, 07, 08, and so on. And then there is this moment in here as well of big spikes. If you want, you can compare when these spikes happen and go check how the indices and the market reacted in there. So yes, VIX, paying attention to it. Let's see now if it gets closer to the 30, maybe it's going to get there, and how it's going to move. Most likely today, expect some more volatility in here as well. So yes, oil, VIX, we took a look at that. And now the individual currency pairs that you are looking at, right? So euro has been moving to the upside. So after basically retested the lows, and this is a big divergence actually, and one divergence is to pay attention to comparing with the dollar index and the euro dollar, because dollar index broke the high that is basically related to this low back in January, while euro is still trading above this high. So there's a slight divergence in terms of the movement and the zones that were respected between dollar index and euro. Usually they are almost perfectly correlated, and at this point, even though you could still see dollar going down and euro going up and vice versa, but in terms of the zones where it was respected, it was different. It went all the way there. It was a great zone to react from. We managed to break these highs, and let's see what's next going to happen on the euro. Are we going to have a continuation to the downside, which means dollar could go higher, or we'll see. We'll see what we're going to have in here, and this can be seen, of course, the gap that we had over the weekend. Maybe we're going to fill the gap, and after that, we'll see what's going to happen on the euro. Again, this high, it was created around the last ECB press conference. Again, we saw the sell-off on the euro after that. 1 month and a half afterwards, you're going to have the new ECB press conference. So we're going to see, let's see where the euro is going to be. Is euro going to go a little bit higher, maybe before kind of moving down to the again by Thursday? We'll see. We'll see where the euro is going to be by next Thursday when you have the next ECB press conference. But here you go. It's another one, another move in there. This was another one as well on the 15th of December, the previous ECB press conference. The last of the last year. This was the first of this year, and you can see that then for basically a month or 3 weeks time, we had a full complete move to downside on the euro until finally during that NFP data, the first one of the year, we had the move to the upside. But it's just to see. You can go and study the last ECB press conferences and how the euro reacted to them. Pound, what we have, right? Strong move to the upside, and after breaking those lows, something that we also paid attention to, right? And we mentioned that this low, it was already kind of a break to the downside after taking this double point here. We did add it move upwards, which was also something that we covered, and now finally we took this low. It was a nice reaction. We feel this compression. This was one of the reasons that you're looking for price to go further down, is because this low kind of paused in the middle of this compression. Now finally feel it reacting from this demand zone, and we had the move to the upside. Now we are reacting from these highs. Let's see again what the pound is going to do. Of course, paying attention to the dollar as well, and so on. Let's see how price is going to move from here. Are we going to continue to move higher, or are we going to have some kind of reaction to the downside? Aussie, it was another one. So Aussie broke below this level. It was another one that were bearish. Price was in the middle of this compression, so all this was expecting to be filled, and here we are. Next level to be this previous level of resistance, with price now kind of pausing in between. So this can maybe be seen a little bit of as a goof down. Nevertheless, maybe can have a little bit of a retracement towards here before maybe continue to move down, or you can even have a deeper retracement on the Aussie before eventually kind of continue to move to the downside, maybe all the way through this level before you finally have that move higher, or even somewhere in here if maybe you have a continuation to the upside. So there are a few levels in here that eventually Aussie can react from. Yes, we did manage to break this low, so maybe a little bit more room to the downside eventually. and the end pairs that you're looking for. As you can see, the end moving to the downside. It reacted really nice from that level to something that you're looking for as well. The move to the downside on the end pairs, which kind of strength on the dollar on the yen index. This morning already, one of them that finally managed to close the gap. There are still some gaps to be waiting to be closed in other assets, and now we have the continuation to the downside. Reacting from this previous level support resistance. So let's see from here what's next. Maybe a little bit more room to downside can be expected. We are a little bit in the middle between all these lows in here and all that high. So yeah, maybe can go continue to move down slowly. Price can even go somewhere in here before maybe continue to move down. So let's see. It's another one. It's in the middle with spaces to fill either up or down. So let's see what's going to happen next. Euro yen as well, another one that you're looking for price to go down. It just took this low. Maybe there's a continuation to move down all the way until there. It's another one that you're looking to move to the downside after reacting from this important level of supply and all the approach that we had in here of seeing price breaking lows and then retesting the highs quite nicely, respecting the zones and moving down. CAD, USD CAD, which had a really strong move to the upside last week, right? We finally managed to break above all this level in here, and not just this, we literally filled all this space all the way until we took that high in there. What a big move! Now collecting that liquidity and price starting to move down, and of course this previous level of resistance can work quite nicely, as you can see in here, as a support level. Then eventually you can even go a little bit more further down, but for now expecting some reaction from here, as you can see already. Then eventually from there could also happen with this money in here. I was looking for price to eventually go a little bit higher. Price didn't really reach there. The sell-off or the move to downside occurred last Friday with the NFP and the unemployment as well in Canada. Yeah, let's see. Nice reaction from there. Maybe you can have a little bit more continuation to the upside. The approach in here, it was really great, which could have led or tried to look for that sell opportunity, because we had all this compression already happening in here. That was a good anticipation or approach towards a good level to for a sell. So it's another one to pay attention to and follow what the dollar is going to do on CAD. And dollar franc Swiss all the way to the downside. So it's retesting now. This level is going to be interesting to see if this low is going to manage to hold price, or by any chance you're going to start creating new lows, which then can maybe go out or even targeting this low altogether towards there. But in here, nice reaction so far. This low is still fresh. There's maybe something a little bit even a little bit underneath. We have this double low created in here, so I could see price. Let's see. I'm curious to see how price is going to behave from here. We kind of had out this compression. Okay, price reached all the way till there. Not sure if this would be kind of the final destination for this highs. Eventually could see a little bit more bullishness occurring as well on the dollar franc Swiss. It was a nice goof down in here, so we could have seen or try to look for that sell opportunity on Friday. But again, it's another one moving quite fast and strongly. Curious to see how price is going to behave around these lows. In here, maybe there's an opportunity to look for longs if the move is interesting enough. We are having kind of this kind of approach. Let's see, try to find their own opportunities in there. Gold, as we have seen, kind of moving to the upside. It now took out this high, so this was the zone that we were looking for, eventually to be filled. Really nice reaction from this demand zone. It's reacting from this level in there as well, which was also reacting from this previous level of resistance, working now as support. So on the level where gold eventually all these walls reacted from, it was quite strong and relevant. You could see it like that. It also took this high, so maybe the bullishness on gold, it hasn't finished yet, and maybe without this craziness that is going on in the market, maybe we can see gold continue, gold and other commodities continue to go and move to the upside as an edge position for all this situation that is going on. So it just took this high. Maybe retesting this level that has been already retested, but we can have a continuation to the upside. It was a really strong move to the upside last Friday with the NFP, and then now the situation that we had. There is this gap still in here. Maybe it hasn't been filled. Maybe price can still fill that gap and then continue to go higher. Maybe expecting some kind of reaction somewhere in here. Of course, we have this level in here. Can see a little bit of a reaction. Maybe something in there as well, but eventually we can see maybe gold eventually going to the upside. Maybe testing this level first. We'll see what gold's going to do. Bigger picture, I think I could see gold going a little bit higher. We actually took this high in here, reacting from a good level in there. But meanwhile, for this week, I'm going to be interesting to see how price is going to behave around these levels. There's maybe some sell opportunities, but then eventually, bigger picture, still a little bit of bullishness on gold. And now we have crypto, right? So what happened with crypto? We had a big sell-off in the middle of the week, and now we had a big move to the upside over the weekend. Basically, after the decision from the Fed to intervene and to ensure that at least everyone would have access to their deposits from the CVB bank. And we had that move to the upside. Before that, we had a big sell-off that took us all the way back to below 20k, 19,500. Many people got bearish, and now many people most likely is going to be bullish after seeing all this reaction. We don't need to behave of kind of emotionally like that, kind of be bullish or bearishness after it happens. Pay attention to where the price is reacting to in order to make your own decisions. Price just literally broke these lows. There's maybe more room. Interesting to see how price is going to behave around this supply level. In alignment without this previous level of structure in there. That can maybe lead again for another move down. And let's see if the crypto market is going to be in alignment again a little bit with the indices like last year. Like when you had a bearish year last year in the indices, the correlation between the crypto and the indices grew quite strong. Let's see if that's going to resume or not. If the bearish scenario comes back in place in the indices. So yes, paying attention to this level, for example, can be interesting. We just took these highs, a little bit expected eventually to take these highs. Where does BTC react from? I think there's maybe more room to go to navigate towards this level in here, at least, or a little bit in there. So maybe a little bit more room to the downside on BTC and Ethereum. A little bit more of the same. Yes, it's a little bit closer now to the highs. Ethereum reacted quite nicely from that level. It respected this lows in there. See a little bit more room to the downside. We'll see how Ethereum is going to react. Question mark is, are you going to manage to break new highs, or by any chance are you going to respect some kind of level of structure in here and just continue to go down? Ethereum bigger picture, as you guys know, and make sure you're still looking for price eventually to go close to that 1,800 mark, somewhere in there above this high. So we'll see what's going to happen at space. With that being said, guys, that's it for me for this weekly market analysis. Be safe out there. There's no need to rush. There's no need to be overexposed, and there's no need to try to run behind the market. As you see, maybe a big move occurring. You're trying to maybe you missed the best entry opportunity, and now you have FOMO and thinking that you're going to miss the move. Relax. Yes, there are opportunities to make a lot of money in these kind of days, but maybe the strategy that you have even created for yourself is not even considering this kind of days. So you can still be profitable and make money without being so excited or overexposed in this kind of days with so high volatility. Again, remember, first rule for us is to stay alive, to make sure that you are back tomorrow and that we don't lose our accounts in rushing days like this. This was kind of expected to see eventually some sectors to show some troubles. Question mark it will be how the Fed react to it. Will they bail out? Will they intervene? Or will just let everything crushed? Apparently, the Fed is being scared and is helping. What can I expect from regarding inflation from now on? We'll see. Tomorrow's data is going to be interesting to see if it's going to go in alignment and go back to 6%, or by any chance is going to go even higher than expected. If it goes higher than expected, expect a big sell-off in the indices. Because the Fed, again, what has been the main focus of the Fed for the last 12 months? Fight inflation. And now they are in this crossroad where they need to intervene and to help create better conditions for the banks. We'll see. It's a big question mark. Let's see where we are going to be in 1 week from now. Thank you for watching, guys. I'll see you next week.